This is lesson 8.3. This is disposing of plant assets. This is found on page 235 in your book. You really need to make sure you've read this section, that you've taken notes, that you understand it before you watch this video. Discarding a plant asset with no book value. So sometimes we have a plant asset that we have used so long that there's no estimated I am blanking right now. There is no salvage value left. Sorry. We have used it so long that there's no salvage value that someone wants. No one's going to pay us anything for this asset that we have, so there's no book value. So on January 5th of 2016, or that year, we discarded a storage cabinet. The original cost to us was $275. The total depreciation through December 31st was $275. It's junk, basically. Cost us $275. We've used all the depreciation. Okay. To do this, we need to record an entry to remove the plant asset from our accounts. So we need to go into our general journal. We need to go into our accumulated depreciation and debit our $275, and then we need to credit our office equipment because this is becoming a expense to our business now that we have this equipment, office equipment, the storage cabinet that we can't get any money from. Okay, we can see that this estimated salvage value is 0. Okay, so we know that there's nothing left in this storage cabinet. We need to write the date and the amount and the type of the disposal. So this is that part that earlier we talked about we hadn't done. We hadn't disposed of it yet. Now we are. We've discarded it. We couldn't sell it. No one wanted anything for it. We couldn't trade it in. Okay, so on January 5th of this year, we didn't get anything for it, so the disposal amount was 0 and we discarded it. Now we're going to discard a plant asset with a book value. So on June 30th, we discarded an office table, so we threw it out. We didn't sell it, we didn't trade it in. Okay, the original cost to us was $200. The total accumulated depreciation through December 31st was $140. But as you can see, we need to get to June 30th. So there is this partial year credit or depreciation expense, excuse me, of $20. So the first thing we need to do is record that partial year's depreciation. So here's that $20 that we need to debit for our depreciation expense and credit in our accumulated depreciation. Then we need to record the partial year's depreciation, which would be our $160 in our accumulated for office. Okay. Then we need to write the date, amount, and type of disposal. Okay. Here's the discarded June 30th. We didn't get anything for discarding it. Okay. And then we need to record our entry to remove that plant asset. So we are going to take a loss on our plant asset of that $40 that's left. So that would be our $200, which would be our office equipment, okay, minus the $160 and the $40. Okay, so our loss on our plant assets is that $40. Sorry, $200 minus $160, that gives you $40, which would be your loss on your plant asset. Okay, if you're wondering why this is $160, remember that we had $140 of depreciation plus this 20 of this partial year. So we have $160 of depreciation. 200 in our office equipment, our original cost. The difference there is that $40 that we lost. Selling a plant asset. So this is if we have a fax machine here. We received cash of $185. So, however many years ago we bought this fax machine for $600. It depreciated through December 31st, $400, okay, and now we've received $185. So we need to compute the gain or loss of the sale. We need to write the date and the amount and the type of the disposal, okay, and record the entry. So here's the date. We've sold it. It's $185 that we received for selling it. Okay, then we need to go in and put in our cash credit of the $185 we received. We are going to take this $400 that depreciated and debit that in our accumulated depreciation. We're going to have a loss on our plant asset of $15, and our original amount was $600. So our office equipment credit, it will be $600. Okay, if you take away the 400 that you accumulated, you're down to 200. Minus that 185, you have $15 that you've lost. Okay, you should have received $200 to make up for the difference there, but we only received 185, so we did have a loss there on our plant asset. Trading a plant asset. On June 27th, we paid cash $850 plus the old counter for the new store counter. Okay, the original cost of our old counter was $1,000. It depreciated through June 27th, $765. Okay, so we need to compute the original cost of the new plant asset. Okay, so it looks like our store equipment will be debited for $1,085. Okay, our cash credit that we're going to be paying is $850. Okay, because our store equipment, that our old counter that we need to get rid of, was $1,000. Our accumulated store depreciation was $765. Okay, and the difference there in our store equipment was $1,085. So we need to go through here and we write our trade value of $235. And then we have our plant asset record here, our new record of this new counter for $1,085. Selling land and buildings. Now, land and buildings don't depreciate. We just talk about them in a just change of price, okay? Or we talk about them just when we discard them, we talk about the original cost and then the cost for which we sell it. When we do this journal entry, it removes the original cost of the land and the building and any related depreciation. It recognizes any cash received, and it recognizes the gain on disposal of the plant asset. Okay, so Fidelity Company sold land with a building for $97,000 cash. Original cost of the land was $25,000, and original cost of the building was $150,000. The total accumulated depreciation on the building through December 31st was $85,000. Okay, this is a lot of numbers. It's a lot of stuff to look at, but we need to make sure that we really understand this. Okay, so the first thing we need to do is compute the gain on sale of plant assets. So we are going to take our accumulated depreciation of our building, which would be $85,000. Okay, and put that in our debit. Then we're going to have our land and our building. Our original cost was $25 for the land, $150 for the building. Okay, and then this cash credit would be, we sold this land and the building for $97,000. Okay, so the gain on the plant asset that we have received is $7,000. Okay, then we need to go in and say how we disposed of the land and the building. Okay, so here is our building. We sold it for $97,000. Okay, on January 5th. Then we need to record an entry to remove the plant asset from the account. So this is removing those two plant assets. These would have been debited prior. Now they are being credited, so we no longer have that land or that building. Calculating the gain on sale of land and building, this is what this will look like. You have your total cash received of $97,000. The cost of your assets will be broken up in between your land and your building, so $25,150 for your building. Your accumulated depreciation was $85,000. Your book value of your assets sold, okay, and then your gain on your sale of your plant asset. So this is another way to look at this. If this is easier for you than looking at it this way, in this cash receipts journal, I would, if it was me, this is what I do. I write it out every time. Okay, I just have what I need to know, my land and my building and my total.